Hello friends, this is Music Man from his man cave, and so now we're going to talk about the stock market. Should you invest? Let's talk about it coming at you right now. Hello Music Man from his man cave. Here are my thoughts on the stock market and investing in it. I stay away from it. Why do I stay away from it? Because it's higher risk. The stock market goes up, the stock market comes down. And unless you're a very shrewd kind of person that knows how to, here's a word that they use a lot, diversify your portfolio, diversify, then what's going to end up happening is you're probably, if you don't have experience, when things are going high, you're going to buy. When the best time to buy is right after the stock market crashes. That's the best time to buy. That's all I know. Friends of mine, people I know, they were lucky. They just were lucky. It wasn't that they were some kind of genius or anything. They just did things right. They sold out of a house or whatever when the market was high, and they ended up being, they ended up with $500,000. And there's others that held on, and when the stock market crashed, they panicked and sold when it crashed out of fear. So they lost a lot of money. That's when they should have just stayed cool and just left it alone, as far as I'm concerned. So it goes like this. I don't know much about the stock market, and I know that it's usually the sin products that are the most stable. You know what I'm talking about. Booze, wine, cigarettes, they're stable. They'll always stay stable. You know why? Because nicotine is highly addictive. So you have to ask your question, do you really want to make a profit off people's vices and sin and stupidity? Somehow, for me, that doesn't feel right. Those are the most secure stocks, though. And they're tied into a lot of other things. Don't think that cigarettes are just cigarettes. They're tied into a lot of things. And I won't go into that here. I'm just telling you, for me, the stock market, to me, is a game of musical chairs. And so that's the only way I can describe it, the way I understand it, as I talk to friends. Basically, you're doing this musical chairs game, and the stock is going up. It's going up, and it's going up, and it's going up. And if you sit down too early, and then it crashes, ooh, disaster. Right? No, actually just the opposite. See how confusing it can be? That's when you did good. You sat down at the right time. Everybody else didn't sit down. They're like, what's wrong with you? Why did you sit down? Well, you're the only one that sat down. They'll say the music hasn't stopped yet. You go, I just felt like my gut instinct told me to sit down now. And they're like, you're crazy. And then the stock market crashes. And then everybody scrambles and sits down. It's too late. That's the stock market. Usually the music hasn't stopped yet. And the right person sits down. And usually they're just lucky. They sit down before it, so that's cheating, right? You're not supposed to sit down before the music stops. But that's how those people that came out smelling like a rose did well when the stock market crashed, as they sat down before the music stopped playing. Everybody else was still dancing around and having a good time, and it was that unique individual that said, I'm not feeling right about this. The music playing, but the Titanic's going down. I'm sitting, and people are like, you can't sit down, the music. The guys are still playing music on the deck of the ship as we dance and play. There's a metaphor for you. It's like the Titanic going down, and those guys were still playing music as everybody's dying. And you recognize everybody's dying, and I need to get on a boat, right? You're getting in a boat, and you're not worried. This ship will not sink. It's unsinkable. Okay, and then that very person takes their money, talk about double killing it. After the stock market crashes, and they have all that money, they buy, and diversify. And then it'll slowly recover. It always does. It did in 1989. It did in 2008. Now, here's the deal with me. I'm not going to mess around with the stock market at my age. First of all, I don't like playing musical chairs. If I miss the chair and end up on the ground, I can about break my back. There's another good metaphor for you. It's a younger man's game. I'd rather just have a good, 3 to 5% interest, compounding interest on my money and not play the stock market game. Why? Because I explained to you that it's risky. It's playing a game, and you don't know when to sit down. So and it's that unique individual that actually comes out really being a winner every now and then. Most people end up losing a lot because they go along with the crowd and they jump off the cliff with the crowd. People just do that. It's stupid. Just like people right now all got to have cable TV. People all right now got to have every electronic gadget. People right now all are buying brand new cars. Why? Stupidity. You can't reason with them. They can't be rationalized with. They're going to, just beat you down and tell you you're crazy and you're an idiot. Everybody's doing it. It must be a good idea. So, there's my thoughts on the stock market. Take it or leave it. I don't want to play musical chairs no more. I just want to retire with what I got. It's not a game for me. Because I might sit down way too early and before the thing quite peaks. I'll be okay, but it all comes out in a wash anyway. Any guy that knows the stock market will tell you that. The way you win at the stock market is just be consistent and not to sell out in fear and not to buy up when something's being forced just to go through the roof like the housing market did. Anyway, take it or leave it. Music Man. Stock market. Stock market equals risky to me. Bye. Take care. God bless.